All right, let's try this again. We have bad weather here, so I lost power, so hopefully we keep power this time. So anyway, where was I? This is Bitcoin on the day chart. We can see that we're coming up here and we're fixing to test this 233 moving average. This 233 moving average is a Fibonacci number, so it's really good to have. I personally think it's better than the 200. But I had some inboxes that messages from the inbox and asking, does symmetrical patterns work in cryptocurrency? And the answer is no. The answer is no and yes. Uh, Maybe 20 to 30% of the time it will work on there. But if you try to do a symmetrical pattern in a volatile market, that's just dumb, in my opinion. Price action is king, and you need to go with the price action. If you're trying to hit a symmetrical pattern in a bull market and it goes past your targets of entry and it starts continually going up, you're going to take a loss because it's not a good pattern to do in a volatile market. Cryptocurrency is extremely volatile, so you should use that as your advantage to take positions and ride those positions as far as you can using a EMA or an indicator or whatnot. I watched several videos over the past weekend and on Monday, since it was a holiday, of traders that are trying to use symmetrical patterns and like a bat pattern or a butterfly pattern or something like that. They look good on charts and they look like they know what they're talking about, just because they're using big lingo and using the solar eclipse and all. That's a bunch of junk. Use price action. Stick with your price action because price action is king. Your indicators will tell you which way you're going. Don't try to guess where those patterns are going. Patterns are good if you know how to use them in a volatile market. So if you use a pattern that is hardly ever seen and expect it to work more times than not, it's not going to happen. It's just not going to happen, and it won't. So you got to use a little bit of logic, a little bit of wisdom, and learn how to read the price action on there, which candlestick patterns you could use to benefit in a volatile market. We created a whole system, a whole academy, so you can learn how to identify the proper candlestick patterns. And if you want access to that, you just go to the website in the description box below, or just go to the Discord, and which is also in the description box below, and you'll get access to it. But if you use patterns, know that you know how to use them, and you can't guess, especially in a volatile market, because it goes parabolic all the time. So just keep that in mind. So here's the day chart. We're coming up to the 233 moving average. It's around 22K. If we break above that, we're probably going to continue to head up just a little bit. I don't expect it to break it and stay above it and find support above the 233 moving average. I do believe when you're in a bearish market, this is just a nice big correction. This is a big cup with a M pattern somewhere down here in the middle, but this is a big cup. Is this big cup going to start going sideways and giving us a BART pattern, which is a good pattern in cryptocurrency, especially in Bitcoin? Or are we going to break this and start heading up? You got to think about it this way. You're in the whole world is in a recession right now, right? So you got to be wise with your decision. Where is this money coming from? Here in my home state in Texas, maybe 5, 6, 8 months ago, let's say 8 months ago, you could get a dozen eggs for like $4 or $5. We just went shopping last weekend, or this past weekend on Saturday, and it was $9 for some eggs. If your eggs are more expensive than your minimum wage, you have a problem. There's a problem, and it needs to be addressed before new money comes into investing. If people have to spend twice as much on some eggs or twice as much on milk, this tells you, logically speaking, that this movement is fake. It's coming in, it's big money coming in. So you know it's not the low income people that are making it. The people that really need this movement, hopefully they got in at the bottom. But just think about it logically. The whole world has inflation. We're fixing to enter into hyperinflation. They're doing a conference in Davos today or this week, and they're going to talk about introducing a cryptocurrency. That alone is the reason why they're pumping it up, because they're trying to push their agenda. So be careful with that, and be careful listening to people that are all bullish or all bearish, because that's not how the market is. You don't try to complicate it stuff. Don't try to add 1,000 different Fibonacci lines on 17 different time frames. It doesn't help you anything. It just confuses you. Stick with the pattern, do it, get it done with, and stay with it. Don't try to change it. That's where people get in trouble. They'll have a system, and since it failed on them one time, they would try to change the time frame or change a different indicator and the different indicator settings. Stick with your plan. All indicators will work. Every single one of them will work on whatever setting that you create them. You just got to figure out, the goal is to figure out that settings and how to master those settings. So everyone will work. All moving averages will work. You just got to figure out how to apply it to your trading. And that's what we teach in our academy, that you're more than welcome to join. Discord is free. Just go join the Discord and learn how to trade it. But anyway, let's get back in here. So here is Bitcoin. Let's go to the week chart. Here's the week chart. It looks like we're breaking over the moving average right now. This will be a little bit key to us because we had down here, we had an inverted BART system, or pattern, I mean, and you can see that it's nicely done. So usually what happens when you have a BART pattern, it starts mimicking this. So here's where it starts mimicking at. So what we looks like is going to happen is that we're going to start going sideways for a couple of weeks, and then we'll eventually head back down. But you can see that we're fixing to have a death cross on a week chart. That hasn't happened for way back over here, and look at this big dip that happens. Right here, it went up, or you had a golden cross on the week chart, and look what happened. You have a massive pump. So that's probably what's going to happen. That 233 moving average is at around 25K. So that tells you, logically speaking, a good position to look for shorts, not take shorts. If you look for a pattern, I can't stress this enough, that I can't believe some of the traders that are on there saying it's going to this level and that's where you short. No, it's not. You go to that level and you look to short with confirmation. You don't just take a pattern and trade it because it's a pattern, because the pattern could be broken. And then what? Now you're going to take a loss, or you're going to have to dollar cost in on your short. That's dumb too. Don't do that. We teach you all this in the academy. So logically speaking, anywhere between 22 to 25K, that's going to be our local top. And you can see right here, where's that at? That's about 25, 200, right around there. That's where we had the swing high right here, and then it just dropped. So you're gonna have to you have a bunch of resistance to get through before you can say that we're going to new all-time highs, which I don't believe that we will see this year. Anyway, so that's what Bitcoin is. We're gonna look to short it when it gets up here. Look to short it, not short it. Just because it goes there doesn't mean you're going to take a short. You want confirmation, or you're just going to get liquidated. And the whole point of trading is to make money, not to gamble. If you want to gamble, go to Vegas. If you want to learn to make money, join our academy. But you can go down to the lower time frames. Here is the hour chart. You can go 4 hour, 2 hour, whatever time frame that you really want, and you can see that you're starting to come down, right? But what we do have is a regular divergence. Let me turn this Let me turn this angle on so you can see it. It's a 5-degree angle up, and here is a -7-degree angle down. This is a divergence. However, you want to use your moving average as your confirmation. So if we close here below this, you can barely see it, but you can see this white moving average. If you close below that moving average, then you're going to want to take a short, use your swing high as your stop loss, and do it that way. That's the safer way than to try to guess on a particular pattern. The best patterns to use are breakout patterns, like a double top, a M pattern, a W pattern, a trend line pattern. Those are the best because you know that it broke out. Most of the time it's going to retest, and you know exactly where your stop loss is. If you try to trade with symmetrical patterns, you got to know that that's, first of all, it's very risky in a volatile market. Those patterns work in the stock market because they're not as volatile as cryptocurrency. So you got to wait for the pattern, breakout patterns to trade, and you got to have confirmation. Just because the pattern breaks doesn't mean that you take that position. You have confirmation that you need to have. So you have a trigger and confirmation, take the position. So it's a 3-step process to learn, and it helps you out quite a bit. Here's our custom MACD. It doesn't look like a traditional MACD, but it is our custom MACD. You get access to all 3 of these scripts too if you're a member of our Discord. But you can see that we're starting to go near that zero line. Once you get down to that zero line, you start having crazy movements. So you got to be careful. You want to have all the probability as much as you can on your side. We do have a divergence, but look where we're at right here. This is a 50 moving average right here. So if it does break down, it still has to break down the 50 moving average. So if you wanted to be a little bit more cautious, which I would recommend, since we had this massive pump in this doji right here, we have the bulls and the bears fighting. Wait until it starts breaking down, and then you take that position. Or you're gonna have to either take a small position, use your swing high as your stop loss, and double it down. But just know that when it starts going between these moving averages, let me get rid of this. When it starts going between these moving averages like this, look what happened. It starts going back and forth, and it happens every time that it goes in there. Because like right here, it starts going in there, it doesn't know what it wants to do, and then finally it breaks out, comes back down there, breaks out again, and then you do it. So you want to catch these breakouts on these moving averages to see it. Right here, you can see that it just did all kinds of crazy stuff between the 2 moving average, broke out, now you could have rode it down. Came back up, broke out, ride it back up. That is the easiest way to trade and the safest way to trade. All the other stuff is just hyperbole, and it's just going to make you have your chart really clustered. If you have a chart that's really clustered, you can put 1,000 trend lines on there, and the price action is going to hit one of those trend lines. So keep your charts clean, read the patterns and see the patterns on whatever time frame that you trade on, 1 hour, 2 hour, 5 day, it doesn't matter. Learn that, and we teach that, and we teach you how to do that, to understand it and how to identify it. But anyway, that's Bitcoin. Let's go to Ethereum, and then we'll get on out of here, and I'll be back on tomorrow. Ethereum looks a lot better too. You still have your divergence. It looks like looks like you still have a divergence. Let's see. You have a 2% angle. And then down here, you have a -18% angle. But what you have right here let me get rid of that. What you have on here is you have a bearish engulfing, which is really strong. You have this massive wick up, bearish engulfing. We have 16 minutes left. So 16 minutes left, and you could short Ethereum and Bitcoin. And we'll look at them tomorrow to see what it is. If it closes right there on both of them, on this chart, on the what is this, the 1 hour chart, and you can see that it's starting to come down there. But if it does go down there and touches that the 50, watch what it does to the 50. It's going to have to try to break it, or it's going to have to or it's going to find support. You can see right here it tried to break it, broke down several times, and then popped back up. This right here is the reason why you don't take positions during half candlesticks or during the candlestick forming. If you're trading the 1 hour chart, stay with the closing price, because you know exactly what it's going to do. You know exactly what it did do. So you know that there's no guessing where the price is going to go like it is right now. It's bouncing back and forth right now. So you have a divergence. If Bitcoin and Litecoin, or Bitcoin and Ethereum close right there, I'll mark them up. I'll send them to the Discord, and we'll check them tomorrow. Other than that, if you like this content, subscribe, like, join the Discord, and if you want to learn how to trade, go ahead and join our website. It is up. There is content being added every single day, and if you are a member of it, you get access to that, all the training that you could possibly want. And if you want a custom training platform or a custom training setup, no matter what you want, all you have to do is ask, and we'll build it for you. So you have tons of ways to learn how to trade. In the Discord, it is free. You can join the academy if you choose to. But other than that, I will see you on the video next. Remember, price action is king. That's what you go for, and only trade breakout candlestick patterns.